EA Sports. It's in the Electronic Arts. EA, guys. This has been deflated super fast in October and keeps going in November. Let's check the monthly candle chart. Stage 2. And the last time I did a podcast on EA, I had in the stage 2 a while back. Maybe it was around here, continuation. But one candle, two candles, close below the 12-month moving average, and the whole scenario changes. Next month, tries to get back above. No, pressure's up, gap up. But that's the basic muster. It couldn't hold that gap up. Here's the monthly defined breakdown line. This is always a clue. Remember, weight of evidence. These aren't crazy tweezer tops off big candles. But when you look at that, and then you look the following month that you're closing below the 12-month moving average, this reinforces the value of those sellers, bring down those prices off those highs. So that's the concept of weight of evidence. Add. Sometimes you have hard pullbacks on the monthly, but it closes back above the 12-month moving average. See, you had a pullback here, but off the 12-month average, closing above. Still not bearish enough. But once you start getting hard close, try to go back up, and then close below a horizontal breakdown line, you're increasing your chances that is not a simple correction. It's a reversal of trend. All right, here's my target. Man, already well on the way to the target, guys. So I expect it should be hitting some support right here, and I think it did a little bit. Previous resistance or support, this breakout line here, this consolidation pattern of the 12-month moving average. Next one we're going to hit is here at the 75, 72, 50 level. And after that, that's the next one down here off the small pattern here. Ooh. So when we hit monthly defined support on the way to a faraway target, average, you could expect some pull. Let's draw some lines. Here's some potential support. Here's some more potential support. And here is some more support right here. At all these levels, you could expect sometimes a pullback to test a previous breakdown line. Hopefully you test it, and then you're getting close to 12-month average. You're getting further and further away with it. And then after that, good risk-reward entry, guys. Same thing here. Go down, pull back, good risk-reward entry until you reach your target. And the beauty of stage analysis when we're going to head on to the weekly is you could ride this forever until the price action decides to stay above and then move sideways, stage 1, and then after that continue stage 2. But with the swing rule, all you want to do is you want to make sure you get to your target. You want to make sure you don't have too much support on your way to your target. And it gives you clues to how far maybe how the stage is going to evolve. So your expectations of pullbacks on the weekly when you hit this monthly defined support, you can say, okay, it's natural, I'm pulling back. And then you could control the volume, make sure the volume is contracting on those pullbacks. And then you get the whole picture. Then you're ready ahead of time. You know what to expect, which should be healthy. And then you know when it's not behaving healthy according to how you imagined it, then you can say, I'd rather be somewhere else where it's starting to break down. Give myself another chance of it playing out the way I'm imagining it, the good way, than staying in a stock where it's not behaving the good way, how you'd be expecting it to behave. All right, zoom in. Zoom in, zoom in, zoom in. Do I keep these lines? All right. And here we go, man. Mansfield, the indicator combines weight of evidence, combines three evidences: underperforming the SPX, declining 30-week moving average, and price action below 30-week average. That's pretty cool. Another weight of evidence, Ichimoku cloud. If you're below it, you see how it's supported. We could have said, look, it's breaking down right here, Pat. Crazy red volume right here. This candle breaking down. I would have said, close, but you see, it had a whole bunch of stuff here. I said, wait till you're at the Ichimoku cloud just in case this thing wants to pull back up. Lower highs, lower highs. So it tries to pull back up. Pressure of the 30-week average already starting to go downwards. Red volume that you have to overcome. Big red candle. Remember, lots of move on the red candle of high volume. That's buyers turned resistant. So when you have a pullback, those buyers are going to want to get, they're going to sell, want to get a close. They want to break even, want to stop their losses. Okay, there's a rally. I'm out. And then timber. Never get enough steam to get back above. And that's the beauty of stage analysis, guys. It's stages. It's stuff that just happens. Those elements, everything that I've been telling, compounds. And those human behaviors, they rinse and repeat until people forget. They're out of the stock. And then you're in a stage one accumulation. Because it's too, and after that, ride it again. Out of the cloud. So right here. It would have been a good short. This candle right here. October 15th. Below weekly defined support, below monthly defined support, and then it just vacuumed all the way here until it hit this previous resistance or support. The thing is with stage 4s is you don't get as many pullbacks and as strong pullbacks as you do on a stage 2. It's just the fear, the greed. Sell. Oh no, I'm losing money. It's crazy. So all that stuff that Stan Weinstein had outlined in his book. You got to pull back here, not touching the 30-week moving average, and after that, we're not getting back these pullbacks. But those are the best risk to reward entries. Maybe you get less greedy on the pullbacks. Maybe it doesn't pull back quite close to the 30-week average. Oh, too many lines. Okay, I'll remove my scribbles. Okay. Bye-bye, scribbles. Last one? Is that last one? Okay. No, one more. What? This is fun. Okay, let's do it this way. Extend the 30-week average. And maybe we're not going to get as close. But if you see you're close to previous support and resistance, right here is a pretty good entry. If it happens to pull back. And that's all it wrote, guys. Look at that heavy red volume here. If ever the price action keeps going below those levels, these are all going to be sellers. All buyers are going to become sellers right now. All support now is going to be turn resistance, guys. Pretty cool, right? And the final thing that I have, cool little tool. You put a 1 dash in front. And I'm going to start doing that. Oh! You see how it inverts the chart? My Mansfield relative strength is all broken because you have negative values. You're actually flipping the chart. Red candles become green become red. And then you see Because let's say you've been treated well, EA Sports and technology, games, everything's online and all this stuff, all this news and all this stuff. You've been, every time the price went up, you went to check the news. Oh, it went up because they're developing new products. Well, flip the chart. Oh, embryonic breakout with crazy volume. Another breakout of crazy volume. Oh, not quite ready, pulling back within that breakout line because of the Ichimoku Cloud. Remember, weight of evidence, we're not going to play this stage 2 yet until we're out. And then you get that final resistance, that final support, resistance, sorry. And then I get that breakout candle, huge, better green volume, and even this one here. And then you say, okay, Pat, stage 2 broke out. I'm just going to wait for the pullback, and then I'm going to enter here if it's on contracting volume. So that's the type of podcast I've been doing before October, even earlier in the year. You had more and more stage 2s, and this is pretty much how I would have outlined it. I've told you about the measured move, the swing rule, going up. And here I said, look, you're out of the cloud. This is a great place to start to buy. Not all the way here. I'd wait. I say pull back, enter here, and then go off. So forget this is EA. Forget all the bullish stuff, all the emotions attached to you, EA to the moon. If I just show you this chart, and I'd say, would you buy this? How would you play it? And you tell me, Pat, okay, it broke out. I missed it. I'm going to wait for the pullback. But this is definite stage 2. Well, then I tell you, you've actually told me that you want to short this stock. And they say, I don't think it could go down. It has great new games. Well, you see how it doesn't matter? The chart, you flip it. If you still want to buy it or still enter with the inverse position, then that means you've removed your bias, non-price action chart related bias, guys. All right, EA. Hopefully there's a pullback so I could short you. Ciao, guys.